Hello students, my name is Munawar Ali and I am an ACCA professional level student. Today this lecture is on IAS 16 Property, Plant and Equipment. Objective of IAS 16. The objective of IAS 16 is to prescribe the accounting treatment for property, plant and equipment. The principal issues are the recognition of assets, the determination of their carrying amounts, and the depreciation charges and impairment losses to be recognized in relation to them. Scope. IAS 16 does not apply to asset classified as held for sale in accordance with IFRS 5, exploration and evolution assets IFRS 6, biological assets related to agriculture activity IAS 41, mineral rights and mineral reserves such as oil, natural gas and similar non-regenerative resources. The standard does apply to property, plant and equipment used to develop or maintain the last two categories of assets. Now I will focus on some definitions. Now the IAS 16 gives some definitions. The definition of property, plant and equipment is that the property, plant and equipment are tangible items that are held for use in the production or supply of goods or services, for rentals to others or for administrative purposes, and are expected to be used during more than one period. Carrying amount. Carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation and accumulated impairment losses. Depreciable amount is the cost of an asset or other amount substituted for cost less its residual value. Depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. Entity specific value is the present value of the cash flows an entity expects to arise from the continuing use of an asset and from its disposal at the end of its useful life or expect to incur when settling a liability. Fair value. Fair value is the amount for which an asset could be exchanged between knowledgeable, willing parties in an arm's length transaction. An impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable amount. Recoverable amount is the higher of an asset fair value less cost to sell and its value in use. The residual value of an asset is the estimated amount that an entity would currently obtain from disposal of the asset after deducting the estimated costs of disposal if the asset were already of the age and the condition expected at the end of its useful life. Useful life is the period over which an asset is expected to be available for use by the entity, or the number of production or similar units expected to be obtained from the asset by an entity. Now comes the recognition criteria. Items of property, plant and equipment should be recognized as an asset when it is probable that future economic benefit associated with the asset will flow to the entity and the cost of the asset can be measured reliably. This recognition principle is applied to all property and plant and equipment costs at the time they are incurred. These costs include costs incurred initially to acquire or construct an item of property, plant and equipment, and costs incurred subsequently to add to, replace part of or service it. IAS 16 recognizes that parts of some items of property, plant and equipment may require replacement at regular intervals. The carrying amount of an item of property, plant and equipment will include the cost of replacing the part of such an item when the cost is incurred if the recognition criteria, that is future economic benefit and measurement reliability, are met. The carrying amount of those parts that are replaced is de-recognized in accordance with the de-recognition provisions of IAS 16. Also, continued operation of an item of property, plant and equipment, for example in an aircraft, may require regular major inspection for faults regardless of whether parts of the item are replaced. When each major inspection is performed, its cost is recognized in the carrying amount of the item of property, plant and equipment as a replacement if the recognition criteria are satisfied. If necessary, the estimated cost of a future similar expansion may be used as an indication of what the cost of existing inspection component was when the item was acquired or constructed. Now comes the initial measurement. An item of property, plant and equipment should initially be recorded at cost. Costs include all costs necessary to bring the asset to working condition for its intended use. This would include not only its original purchase price but also cost of site preparation, delivery and handling, installation, related professional fees for architects and engineers, and the estimated cost of dismantling and removing the asset and restoring the site. This part of the cost is covered under IAS 37 provision contingent liabilities and contingent assets. Measurements subsequent to initial recognition. Now IAS 16 permits two accounting models. One is cost model and the other revaluation model. Under the cost model, the asset is carried at cost less accumulated depreciation and impairment. Under the revaluation model, the asset is carried at a revalued amount, being its fair value at the date of revaluation less subsequent depreciation and impairment, provided that the fair value can be measured reliably. The revaluation model. Under the revaluation model, revaluation should be carried out regularly so that the carrying amount of an asset does not differ materially from its fair value at the balance sheet date. If an item is revalued, the entire class of assets to which the asset belongs should be revalued. Revalued assets are depreciated in the same way as under the cost model. If a revaluation results in an increase in value, it should be credited to other comprehensive income and accumulated in equity under the heading revaluation surplus, unless it represents the reversal of a revaluation decrease of the same asset previously recognized as an expense, in which case it should be recognized as income. A decrease arising as a result of a revaluation should be recognized as an expense to the extent that it exceeds any amount previously credited to the revaluation surplus relating to the same asset. When a revalued asset is disposed of, any revaluation surplus may be transferred directly to retained earnings, or it may be left in equity under the heading revaluation surplus. The transfer to retained earnings should not be made through the income statement, that is, no recycling through profit or loss. Depreciation, cost and revaluation model. For all depreciable assets, the depreciable amount, cost and residual value should be allocated on a systematic basis over the asset's useful life. The residual value and the useful life of an asset should be reviewed at least at each financial year end, and if expectations differ from previous estimates, any change is accounted for prospectively as a change in accounting estimate under IAS 8. The depreciation method used should reflect the pattern in which the asset economic benefits are consumed by the entity. The depreciation method should be reviewed at least annually, and if the pattern of consumption of benefit has changed, the depreciation method should be changed prospectively as a change in estimate under IAS 8. Depreciation should be charged to the income statement unless it is included in the carrying amount of another assets. Depreciation begins when the asset is available for use and continues until the asset is re-recognized, even if it is idle. Recoverability of the carrying amount. IAS 36 requires impairment testing and, if necessary, recognition for property, plant and equipment. An item of property, plant and equipment shall not be carried at more than the recoverable amount. Recoverable amount is the higher of an asset fair value less cost to sell and its value in use. Any claim for compensation from third parties for impairment is included in profit or loss when the claim becomes receivable. Now comes the derecognition, that is retirement and disposals. An asset should be removed from the balance sheet on disposal or when it is withdrawn from use and no future economic benefits are expected from its disposal. The gain or loss on disposal is the difference between the proceeds and the carrying amount and should be recognized in the income statement. If an entity rents some asset and then ceases to rent them, the assets should be transferred to inventories at their carrying amount as they become held for sale in the ordinary course of business. Now comes the disclosures of IAS 16. For each class of property, plant and equipment, disclose basis for measuring carrying amount, depreciation methods used, useful life or depreciation rates, gross carrying amount and accumulated depreciation and impairment losses, reconciliation of the carrying amount at the beginning and at the end of the period showing additions, disposals, acquisition through business combinations, revaluation increases or decreases, impairment losses, reversal of impairment losses, depreciation, net foreign exchange differences or on translation, other movements. Also disclose any restrictions on title, expenditures to construct property, plant and equipment during the period, contractual commitments to acquire property, plant and equipment, compensation from third parties for items of property, plant and equipment that were impaired, lost or given up, that is included in profit and loss. If property, plant and equipment is stated at a revalued amount, certain additional disclosures are required. The effective date of revaluation, whether an independent valuer was involved, the methods and significant assumptions used in estimating fair values, the extent to which fair values were determined directly by reference to observable prices in an active market or recent market transaction on arm's length terms, or were estimated using other valuation techniques. For each revalued class of property, the carrying amount that would have been recognized had the asset been carried under cost model, the revaluation surplus including changes during the period, and any restrictions on the distribution of the balance to shareholders. This slide is prepared by Munawar Ali Karim Khan. He is a student of ACCA professional level, and this presentation includes extract from relevant IAS. If any problem in understanding IAS 16, please contact me, that is I am Munawar Ali. My email address is munawarali88@hotmail.com. Thank you, bye bye and take care.